good morning, everybody, and welcome to Kroll's 2023 Fraud and Financial Crime Report Roundtable. I'm Judith Slater, and it's my privilege to be the British High Commissioner to Jamaica. I've been here for about 2 years now, and my role, in case people don't know, is I'm responsible really for the UK's relationship with Jamaica across all spheres, including, of course, trade and investment. And this is a very important part of the role. We're really keen to grow British exports to Jamaica in both goods and services, because we have a big trade deficit with Jamaica, and there's plenty of opportunities. And you're going to hear about some of those today. So I'm really pleased to see everybody here in this very busy time in the run-up to Christmas. So I will crack on with introducing what's going to be happening today. So the session's going to be broken up into Kroll's key themes. So that's fraud and financial crime, crypto, and AML ABC. Each of those will be followed by a short Q&A session, and after that there'll be a panel and a Q&A discussion at the end. So plenty of opportunity for all of you to ask your questions. So if you could please type any questions you may have directly into the questions tab, which is on the right-hand side, and then they can be answered during the Q&A. So I'm delighted to introduce the speakers who are going to guide us through these various themes. So firstly, Howard Cooper. Howard is Managing Director and Global Co-Head of the Financial Investigations Practice at Kroll. Howard's a forensic accountant, and he's led complex cross-border fraud investigations for corporates, financial institutions and government bodies across the EMEA region. He specialises in working with large complex data sets and using data analytics to identify wrongdoing, trace funds, identify assets and support recovery actions. Next we have David Lewis. David is the Managing Director and Global Head of Anti-Money Laundering Advisory. And prior to joining Kroll, David was the Executive Secretary of the Financial Action Task Force and the Senior Advisor to G7 and G20 on AML and counter-terrorist financing from 2015 to 2022. And prior to that, he was Head of AML CFT Policy for HM Treasury. Next we have Hayden Jones, who's Managing Director and Global Head of Blockchain and Cryptocurrency Solutions. And Hayden leverages more than 25 years of experience across multiple sectors, leading sales and execution, and is now exclusively focused on cryptocurrencies and blockchain. Prior to joining Kroll, Hayden was the founding and managing director for Blockchain Hub, which is a blockchain and digital currencies advisory company. And he's also held positions at the Bank of England, Deutsche Bank, and the UK MOD, Ministry of Defence. His expertise has been featured in Palgrave Macmillan as co-author of an executive guide to blockchain published in February 2020. So you have a lot of expertise to draw on today, and I hope that everybody has a very fruitful and successful morning. So with that, I'm going to pass the baton over to Howard.
Thank you very much, High Commissioner, for the introduction, and hello everyone. By way of a very brief introduction for those who are not familiar with Kroll, we are a global consulting firm. We provide a variety of services, including helping governments, financial institutions and companies to both investigate and manage the risks associated with fraud, corruption and money laundering. Today, we're talking about fraud and financial crime, and the Kroll 2023 Fraud and Financial Crime Report surveyed some 400 executives and risk professionals across the globe. And we asked them a series of questions to better understand how leaders are navigating complex, innovative, and the ever-changing world of financial crime, and particularly how technology may help. It is, this is stealing some of David's material, but it's estimated that more than $1 trillion are laundered every year, causing a significant impact on the global economy and creating considerable challenges for financial institutions, corporates and governments. So today, David is going to speak on financial crime and trends, followed by Hayden, our crypto expert, talking about crypto. So at this point, I will ask David to pick up the baton and talk about some of the financial crime trends in the report and that he sees in his day-to-day work. David, over to you.
Thanks, Howard. Hi, everyone. As Judith mentioned at the beginning, I'm currently the head of AML advisory at Kroll, and I'm going to talk about this report in the context of what we see at Kroll, but also what I saw as Executive Secretary of the FATF to try and provide a little bit of a broader context. I'm going to cover briefly what I think are the most two interesting facts coming out of or results coming out of the report, the context for this, and then what I think is bringing about the risks we're seeing today, and how technology is being used and how it's both a blessing and a curse. And then I'll hand over to Hayden. So first of all, the main findings of this report that I find most interesting are firstly that most people surveyed see financial crime risk as increasing in 2024 in the next 12 months. That's not a huge surprise, I don't think, but it is an important one that I'll come back to. The second one is that the same people expect to see their firm's investment in technology increasing. And for me, the combination of both of those things presents all kinds of different opportunities and risks, and I will come back to both of those. But just to be clear again, most people think that financial crime risk is going to be increasing in the next 12 months, and they also expect their investment in technology to be increasing. So the context, well, Howard mentioned that the scale of financial crime today is in the region of $1 trillion. To be honest, no one knows. Estimates are between 800 billion and up to 6 trillion annually. The bottom line is it's a lot, and we're probably only seeing some of it. So that's the amount of money that's sloshing around the world in terms of dirty money, if you like. What about the impact of that? Well, the FATF, the Financial Action Task Force, coordinates the global response to money laundering, and in estimates by those like Europol in Europe, they see the cost on financial institutions as being in the region of 300 billion a year. That's just financial institutions and just in Europe. So I've seen total or estimates of the cost on financial institutions globally in the region of 1 trillion. So we're talking about a problem potentially as big as 6 trillion, costing businesses in the financial sector alone, and that's not the only sector hit by this, of course, around 1 trillion. And then what do we get back from that? Well, disappointingly, we're looking at a fraction of 1% of the total proceeds of crime available for laundering that is actually recovered today. So the impact, the risk is high, the costs are high, but the return on investment for what we're putting into it is currently very, very low. And I think that's relevant because it speaks to the effectiveness of our current financial crime prevention measures, particularly in the private sector. And on that, the FATF results of their mutual evaluations in the last decade on where they assess effectiveness shows that in almost 100% of countries, the private sector is failing or needs to make major or fundamental improvements in terms of its preventive measures to money laundering and terrorist financing. And that's actually hiding a bit of a problem where financial institutions are generally doing a bit better, particularly as a result of the heightened enforcement action led by the US in the last decade. And non-financial institutions, the so-called DNFBBs, designated non-financial professions and businesses, are doing a lot worse. And so what we're going to see in the next 5 to 10 years is a significant increase in the level of regulatory scrutiny of the non-financial sector. And the FATF evaluations will start in the next round, looking at those separately to financial institutions. So the risks in the non-financial sector are less well understood and greater than we know. And just in case you're not familiar with the term DNFBBs, it's lawyers, accountants, casinos, estate agents, trust and company service providers, dealers in precious metals and stones, and so on. So that's the problem. Those are the people affected by it. This is how we're doing or how we're not doing particularly well, and that's the context in which we're talking about the report today. So I mentioned that we are, or most people are expecting to see an increase in financial crime risks. That's as a result of multiple factors. Geopolitics in the last couple of years, I expect. So we've seen the situation in Ukraine, the situation now in the Middle East, the impact of those on sanctions. We're seeing a lot more cyber-enabled fraud and the need for firms to connect their cyber systems to their AML systems to know whether the customer really is a customer or whether that onboarding process is actually some kind of infiltration attempt by a cyber criminal. All of this together means that the risk picture is getting a lot more complicated than it was. Underneath all of that, we know from FATF assessments and regulatory action that many firms are not taking enough action to stay on top of their risks. They don't properly understand their risks. So in a world where we think that financial crime risks are increasing, and we know that many firms don't understand their risks, then you can see how this is beginning to look like a problem in the making. And at the same time, technology or investment in technology is increasing, and the technology available to deal with these risks is really quite promising. So we're talking about everything from artificial intelligence and machine learning to privacy enhancing technologies and collaborative analytics. So there's never been a greater opportunity to have an impact, a better impact on financial crime than there is today. However, those same technologies also present risks. They can be used by criminals as well as by us. And if we don't implement them properly or don't tune them effectively, then we may be creating other problems. Particularly when we look at artificial intelligence, it has to learn from something. And if the measures we're putting in place at the moment don't work particularly well, then it's going to be learning from bad practice. And effectively what we might be doing is optimizing something that just doesn't work very well. So we have to be particularly careful when looking at things like artificial intelligence. So this is how both financial crime risks are increasing and technology is increasing, and how technology, I think, is both a blessing and a curse. I'd like to come back to this later, and I'm happy to answer any questions on this, but right now I'll hand back to Howard.
Thanks, David. Perhaps if you could just talk a little bit more about if we're seeing firms investing in technology and relying a lot on technology using AI and machine learning and the like, and you flagged that there are the risks associated with that, but how do firms mitigate the risks then of relying too much on technology?
So I think there are a few things. Firstly, it's all about understanding your risk first, so understanding the particular nature of the risks in your organization. And when I say risk, I'm not talking about the risk of regulatory action. I'm talking about the risk of your firm being used for money laundering or terrorist financing. And often when we're talking to banks at Kroll, we see them overly focused on the risk being the risk of regulatory action, getting caught. And if that's where you're focused, you're not really going to be understanding the true risks. So conducting good and frequent risk assessments is critical. And this is actually also where technology comes into play. So great example we're seeing now is HSBC and the partnership they've had with Google, where in the UK, they've effectively turned off their traditional transaction monitoring and they've moved to an artificial intelligence-based system of machine learning, where you have supervised and unsupervised learning. And they're finding that this is a lot more effective in detecting and preventing financial crime. And the regulators have built confidence with this by working closely with them over a long period of time before they implemented it. So I think this shows how you can use new technology successfully, but you need to do it with a lot of financial crime expertise. And technology is not a replacement for financial crime expertise. You need to keep that expertise in your firms, in your organizations, if you're to properly make use of this technology. So it's around properly understanding your risks, making good use of technology and understanding the technology you're buying. By the way, if you get this wrong, if you buy in a black box, then you could be subject to regulatory action for that. So you do need to make sure you're not just buying in a red box. You need to take a black box. You need to take advice on what's right for your firm, your organization right now. And that applies whether you're a financial intelligence unit or whether you're a financial institution. You need to understand the particular problems you're trying to solve.
Thanks very much, David. So that's financial crime and technology. Now, Hayden, our crypto expert, can you tell us a bit about crypto?
Thank you, Howard, and thank you, Judith, for that introduction. A pleasure to be here, and it's always great to talk about my chosen subject, which is crypto. If I just preface this with some findings from the survey, I think it was something like 78% of respondents said it was a concern, so crypto crime was a concern. Of that, approximately about 25% said it was a significant concern. I think what's interesting about that data is that I mean, that was captured. It was probably about March, April of this year. When we opened 2023, forgive me, Bitcoin was trading at about $15,800. Today, Bitcoin has breached $44,000. And expectation is that we'll see another bullish cycle as we move into next year, and that's off the back of various movements by the SEC, in particular in relation to approval of an ETF. So I think this conversation is very relevant at this point in particular, given where I think the market's going to go over the next 12 to 18 months, and importantly, the need to apply some greater strictures around this technology. So what I'm going to do, I'm going to just talk about three things. I'll talk about what is crypto, what are crypto entities, and then what is crypto crime, because actually it's the entities that we're interested in, because those are our friends. As soon as anybody's involved in anything malicious, nefarious, at some point they need to touch the real world, and it's typically through those exchanges that they gain access to fiat or real cash, the conventional banking system. So the first point then, what is crypto? Really important question, this is something I really want to sort of focus on and take away as part of the session, because when you're discussing with family and friends in terms of what that term means, it's very ambiguous, it's very broad. And I think the thing to remember is there's something like probably about 29,000 cryptocurrencies out there. Because we're dealing with technology, because we're dealing with money technology, predominantly open source, so the Bitcoin code is open source. This means that it's very easy for people to download the underlying source code and create their own cryptocurrencies, which has led to a proliferation of this money technology in the form of cryptocurrency. So one headline message to remember there is there's roughly about 20,000 cryptocurrencies. That then is complicated because we have this additional side population of what they refer to as non-fungible tokens, and estimates there run at about 2 million or thereabouts non-fungible tokens. So you've got a vast population of these things that are referred to as digital assets or digital currencies, about 20,000 cryptocurrencies, about 2 million or so of non-fungible tokens. So how do we segment that? So typically what we do, we'll break that up into a number of different groups. So you've got the cryptocurrencies that exchange value, of which Bitcoin is the most notable. You've got utility tokens, and the clue is in the name. Because this is technology that we can code, what we can do is we can attach utility to that cryptocurrency itself. So we can provide access to things like storage platforms or compute or gaming platforms or social communities. So you've got utility tokens. You've got the stable coins. The stable coins are backed by assets that are held in things like banks. They should be audited. They should be ideally regulated as well to ensure that there's no porosity in the different perimeters that sit around the stable coins. And then you've got your securities. Again, because we're dealing with technology that can be coded, we can create assets, instruments that look like debt or equity. So those are the four principal categories when we use the term crypto. So you've got your cryptocurrencies that exchange value, of which Bitcoin is the most notable. You've got your stable coins, your utility coins, and then you've got your securities. Alongside those, you've got your non-fungible tokens, which are, as I said, there's roughly about 2 million of those. And again, because we're dealing with technology that can be coded, what we can do is we can create imagery. And this was the the big sort of use case for non-fungible tokens, where we create unique forms of art that then attract market interest. So you've got non-fungible tokens, and then you've got your anonymity coins. So these are super dangerous. So big red flag is attached to those. Again, because we're dealing with codable technology, what we can do is we can add in layers of cryptography, which means that we can actually obfuscate origin and destination of a transaction, and we can obfuscate the value of the transaction. So these are absolutely perfect for moving funds without alerting anybody to the fact that those funds have been transferred. And as I said, they come with a big red flag. And then finally, and actually this is interesting, it's where Jamaica is one of the leading countries in the world, you have your central bank digital currencies. So because this is super interesting technology in the way that it allows transactions to settle, the central banks realized, it was probably about 5 or 6 years ago, where the emergence of this idea of central banks issuing their own digital currencies was identified. Jamaica is one of the few countries in the world, I think it was launched last year actually, so they launched their own central bank digital currency. So we see, from a risk perspective, this is where we have state adoption. We can reuse this technology in a particular way to, again, address issues such as financial inclusion, but also in terms of improving, costs associated with transactions. So that's our first dimension. So what is crypto? So 4 principal groups alongside things like central bank digital currencies, NFTs, and our anonymity coins. Our second dimension is what are the entities? And the best way to think about that is we have exchanges. So these are venues where people come to buy cryptocurrencies using fiat currency, so conventional money. So you've got your exchanges, of which there are approximately 650 or thereabouts globally. You have your custodians. So these are typically institutional grade entities. So they offer a service offering for institutional investors to custody cryptocurrency assets. You've got your issuers, and they are, again, the way to think about those entities are, they issue cryptocurrency. Okay, so they create a protocol, and it could be backed by something. It could have some kind of utility attached to it, or it could be, in its simplest form, it could be a stable coin. So you've got your issuers, and then you've got your wallet providers. And what the wallet providers do is they provide both software types of technology, but also hardware that allows individuals to store the private key that's associated with a public address that allows you to control your cryptocurrency assets. So your 4 principal entities: exchange, custodian, wallet provider, and issuer. And then alongside those, we have our Bitcoin miners. What's interesting about them is that they are a red flag for potentially laundering money, because what we can do is we can take physical cash, we can take laundered commercial money, and we can use that to buy technology that converts that cash into clean Bitcoin. So whenever we see fresh Bitcoin coming out of a Bitcoin miner entity, we would typically raise a red flag. What we look for is some kind of source of wealth report to ensure that the funds that have gone into that are clean, and we understand the hygiene profile. And then you have your ATM operators who issue units of Bitcoin, other cryptocurrencies. So again, I know in the UK, for example, there's been a big crackdown on these, and what we have done is stepped very carefully into ensuring that whatever's out there is controlled and it's understood. And again, with an ATM operator, you can feed cash in, you can get clean Bitcoin out, and vice versa. So again, they represent a big red flag as it relates to the laundering of funds. So you've got your crypto as a term, and you've got your entities, and then you've got to then overlay a vast sort of typology of different types of crime that can be undertaken. I mean, this ranges from obviously things like child abuse, we've got ransomware, we've got stolen funds, we've got sanctioned individuals, we've got terrorism financing, we've got scams, we've got fraud shops, we've got darknet markets. The team at Chainalysis, they produce a very good report every year that actually looks at the different types of crypto crime that sits across the cryptocurrency, and obviously those different types of entities. It's very clever in that because each of these cryptocurrencies, with the exception of the anonymity coins, because it runs on a public ledger, it gives us the ability to tag the public ledger with effectively an assessment of how adjacent a particular public address is to criminal activity. So if we know, for example, that a particular address is sanctioned, and we can see 5 or 6 hops away from that address, we've got a proportion of Bitcoin that somebody's attempting to move through an exchange. It's possible for the exchange then to raise an alert and see that those Bitcoins have originated from a sanctioned address. So at one level, people say, well, it's very difficult and Bitcoin's anonymous and we can't do anything with it and it's ideal for money laundering. At another level, provided we've got the right kind of scanning tools, it's possible for us to look at transactions and understand where they've come from, understand their adjacency to different types of criminal activity. And we refer to this as hygiene. So we can look at Bitcoin transactions and we can assess the hygiene footprint associated with any particular Bitcoin transaction. And obviously, that then extends into the other 28,000 or so, with the exception of the anonymity coins. So you end up with 3 dimensions. So you have what is crypto, you have what are the crypto entities, and as I said, those are our friends because it's they're used to bridge into the real world, and we'd expect the crypto entities to fulfill their obligations in relation to scanning transactions. And then you have that 3rd dimension in relation to different topologies of criminal activity that we see typically on a day-to-day basis. And it fills me with great sadness to see some of the reports that we receive, individuals who've been scammed out of small amounts of money. I mean, we had one individual, it was $15,000, and unfortunately, it's very difficult to do work on those kind of events because of the effort that's required in terms of actually opening up these kind of very sad events. Shall I pause there, Howard, if you want to open up a few points? I mean, one of the things I was going to go on to was the challenge of data within organizations. But shall I just pause there and let you just maybe open up a few areas of interest further?
Thanks, Aidan. Yeah, it's good for us all to pause to absorb. Each time I listen to you, a little bit more goes in. But yes, so there's lots of forms of crypto, lots of entities, and then lots of ways that we see that that structure is used for fraud and financial crime. So, but then in terms of regulation, then do you think that there's going to be some centralized crypto regulation at some point in the future, or do you think it's still going to be, for the time being, it's going to be country by country? And if you are one of the entities or you interact with one of those entities, you're a firm, how can you understand the regulatory status of crypto?
The world is broadly divided into, I'd say, the following regions. I mean, you have the US, which to date have pretty much adopted sort of regulation by enforcement approach. We have the Europeans who have got MICA, which is obviously an EU-wide framework that they've been working on now for about 3 years, which is quite comprehensive. We've got UK, which is incremental. We see the value. And then you've got the remaining countries. I mean, if you look at Singapore, they've been very progressive. If you look at Hong Kong, equally progressive. The Swiss have been very advanced over the last probably 6 or 7 years yet in terms of their approach and their understanding. I think the common thread that runs through all of this is money laundering directives, and then most recently is the travel rule. So the requirement to identify originator and beneficiary, and obviously the amount that's associated with a particular transaction. And that will be, I mean, and it's working through the system now, that will be imposed upon all crypto entities. And that gives us the ability to look at granular level and capture identity information associated with each of these individual transactions. The extent to which there will be, I think David's probably a better commentator on the extent to which we have global coordination, but we had IOSCO this year who came out with a whole series of recommendations, which are all very positive. Obviously, we've got BIS that look at it from they've been working on the prudential capabilities there as well. So I would argue, and again, I'll defer to David, but I'd argue that there is reasonably high degrees of coordination globally, obviously subject to various geopolitical tensions that I think we're all aware of. I think what we mustn't lose sight of is that, and what is it? It was this is not going to go away. Okay, crypto has yet to have its Chat GPT moment, and I think there's a strong expectation that will happen at some point, but it's not going to go away. And I think one of the big points that came out of the survey was that everybody needs to deepen their understanding of what this technology is all about. And then what we then do, and this is what we as Kroll do, is we overlay, a fin crime framework so that when these types of assets start touching the real world, we can actually look at the hygiene profile associated with the transactions and take action accordingly.
Thank you, Hayden. I believe at this point we're going to introduce Hadari Stewart into the conversation. Hi there, Hadari from.
Hi, gentlemen. How are you doing, ladies and gentlemen? Yeah, I'm Hadari Stewart. I'm the country director for business and trade here at the British High Commission. We have heard some interesting conversations thus far. You've heard from our High Commissioner, you've heard from Howard, you've heard from David and Hayden. Spoken about cryptocurrency, anti-money laundering and anti-bribery, and some regulatory concerns, all interesting topics. I'd like to use this part of the webinar, ladies and gentlemen, to open us up to a wider discussion with all three speakers. First and foremost, I ask you to type your questions directly into the question tab on the right-hand side, and we'll try our best to go through and answer them. First of all, I'd like to start with Howard, particularly because of what is happening in Jamaica right now. You've been spending a fair amount of time in Jamaica in recent months. What are you seeing in terms of the fraud trends generally? And then do you have any observations relating to the impact of those trends, especially in the business environment?
Okay, thank you. I think in terms of fraud, I've got two things to talk about. Firstly, and this is something that Hayden's mentioned, frauds and scams on members of the public and companies. In conversations I have with banks, FIUs, law enforcement personnel, they're all in agreement that they're seeing a dramatic rise in the number of scams and frauds on members of the public and companies. These take the form of romance scams, fraudulent investment schemes, fake e-commerce platforms, push payment type frauds. And in the work that I'm involved in, we're increasingly finding organized crime groups and professional money laundering networks behind these frauds. So No, it's getting much more professional. These groups often involves teams of people working out of an office, often outside of the local jurisdiction, and these if you picture it like a call center, they're sending out large volumes of social media posts, emails, they're making telephone calls to potential victims, and then having conducted the fraud, the fraudsters need to move the proceeds. Many of these scams launder the proceeds of the fraud freely through the financial system. We have seen an increase in so-called the use of money mules. So these are individuals that hold bank accounts and they receive and pass the funds for a small fee. So the fraudsters know how to work the system, and they rely on the inability of banks and governments to spot or stop the activity, either on their own or collectively. In short, it's easy to set up networks of shell companies and then multiple bank accounts for those companies, and it's quick, cost effective, and relatively low risk to move money through those structures without getting caught. In Jamaica, the financial services sector needs to be alert to the risks posed by the increase in these type of frauds and scams and the professionalism of the fraudsters behind them. And the sector needs to focus, it's not just the larger banks, but it's the fintech businesses in Jamaica, the cambios, the payment processors, the FX businesses that might have, as David talked to, they might have strong technology, they might have a strong technical capability, but perhaps they don't have a mature compliance framework underpinning it. Secondly, we have seen at Kroll a significant rise in the prevalence of internal fraud in companies and the impact that this has on the financial services sector. Since the COVID pandemic, we've seen more accounting misstatement fraud, more revenue manipulation type frauds, and interestingly, the motivation for a number of those frauds is protecting jobs or to keep a local branch or subsidiary business afloat, or to keep the local branch from the scrutiny of the head office or the shareholders. These frauds are bubbling up now, but often when we get to investigate, we find that the activity might date back 2 or more years. So as a result, we're increasingly being asked by banks and other lending institutions for help in proactively identifying fraud risks within their customer base. Smart institutions are using technology, they're using data analytics, as well as tightening up on internal controls and processes to attempt to try to spot those red flags before they become an issue.
Thanks, Howard. Very comprehensive. I just want to remind our audience that please use the tab on your right to type your questions so we can have our panelists respond to them. I noticed there's a hand up. If it's a question, just type it in the chat for us. I want to ask David, how about what can we look when we're looking at the specific errors? How can we get a better return on investment in the measures to prevent really and detect financial crime?
Thanks, Tadari. Well, for me, it's about, or rather, it's not about compliance. This is not about just seeking to comply with laws and regulations. The activity that we're seeing at Kroll, and I've seen before, that adds the most value in fighting financial crime is the activity that goes beyond compliance, complying with local laws and regulations. And so it's really about effective action to fight financial crime. And often that means connecting people and systems internally, whether it's fraud, cryptos, ABC, anti-bribery and corruption, sanctions, AML, tax. That doesn't happen. When I was in law enforcement 15 years ago, the fraud people in banks were not speaking to the AML people in banks. It's a lot better these days. Then it's about making it real for people. Often when we talk about money laundering, it doesn't feel real. So a lot of the initiatives I've seen that have had a real impact are focused on the predicate offences, as we call them, human trafficking, the illegal wildlife trade, environmental crime. By making it real for people, they care about dealing with it, and it's not just a compliance issue. Public-private partnerships, we're seeing these proliferate around the world. There's no one size fits all for that, but they're increasingly important, and there are some great examples to learn from. Proactive investigations and intelligence sharing. Don't just sit back and wait for the suspicious transaction reports to flood in. Tone from the top. This has to be, the top of the organization has to be behind this, and it has to resonate, if you're a firm, with staff, with customers, and with shareholders. Make it part of your brand, and finally get the best advice.
Thanks, David. That's very useful. We have a question coming in, and I believe Hayden, I might throw this one your way. It says, how do we think criminals are responding to the greater focus that is being applied?
Unfortunately, it is it's wash, rinse, repeat. And we have just been studying a particular typology that's referred to as a liquidity mining scam. And what is deeply unfortunate about that is that because this is all technology, it's very easy to spin up a new website within a couple of minutes, and then attach malicious code to that particular website that then allows an individual to navigate to that website. And as soon as they navigate to the website and they connect their wallet to that website, the risk is that they are then exposed to that particular malicious code that operates in a manner that puts their assets at risk. And then the unfortunate thing is, so somebody reports that, they report that website URL, so that it gets fed into, we've got our scanning companies, it gets fed into the exchanges, it gets fed into the, the wallet providers. So they then become aware that that website is malicious. But unfortunately, that's public domain information. The fact that that website sits on a block list, so it becomes blocklisted, so it's blocked. It's very easy for the scammers then to go to that block list, and they can see, because it's all open source, it's all public domain information, they can see that they've been immediately blocked, and then they can just spin up new code that's then out there that unfortunately, people who are newcomers to this scene, that they have no initial knowledge in terms of understanding how to navigate these different threats. And this is why we see, and I'm not making this up in any way whatsoever, but typically we will see almost daily some kind of inbound question from people who've been affected by this, and it's deeply unfortunate. The answer, I think, is education. I think the answer is regulation. I also think, and I've made this point publicly previously, I also do think that there's something in the way that the domain name operators provide these services to people who are out there. I know you can take domains down if they are malicious, but it's quite an extensive process to go through. I do think as well we need better identity information that's actually attached to domains, websites that are out there, and I would apply that as a test. So if we haven't got identity verification information associated with a particular domain name, then I would, that for me is a red flag. So unfortunately, it's wash, rinse, and repeat. I think we then overlay, where the AI trends are going. It's possible to create code that creates different types of algorithms, and I have no doubt in my mind that in time we'll see code that then leverages all the different open source code that's out there in relation to cryptocurrencies. So we have that threat, and I think it's coordination. I think David made the point about internal coordination. I think globally, and I do know the different government entities that operate across the globe. I know they all get together to talk about these different topologies, but I think coordination is absolutely essential. It comes back to where we started, which is understand the technology, and therefore build on that to understand the topologies of the threats that we see daily.
Hayden, thanks for that response. Very useful. I would throw this question Howard's way from the audience. It says, could you please elaborate more on the accounting misstatements, etc., increasing in the context of Jamaica?
Okay, thank you. I would say firstly that in the accounting misstatement frauds that we've seen, it is universal across industries and across jurisdictions. So I don't think it's particularly a Jamaican observation, but we are seeing an increase in the number of occasions whereby revenue is overstated, or assets are overstated, or liabilities are understated. The most recent example that I can think of was a business that was it was using a debt factoring. It was using a bank to factor its sort of invoices, discounting of those invoices, and it was putting through inflated sales through that process to improve its liquidity, but it also had the effect of overstating its revenue. So what is behind this? Well, you have the financial crisis, which has sort of impacted across multiple industries and across the globe, and then the COVID pandemic has had a number of interesting outcomes, but it has presented more opportunity for particularly subsidiaries and offices that are not near to headquarters to take a bit more control, ownership, and have a bit less oversight to enable them to put through these type of transactions. So if you are a lender, the point I was making earlier is it's to be not just to focus on AML and ABC, but also to think about the variety of fraud risks that might be present in your customer base, and what are the triggers, what are the red flags that you might be able to use to spot those.
Thanks so much. I have another question. The questions are coming in so quick and fast. I'd want David to take a stab at this one, and maybe Hayden could support. The question says, is knowledge that an entity is using crypto or involved in the use of crypto de facto a reason for heightened DDs?
I was just saying that I would say yes, but I'll let Hayden answer this, and then I'll come back if that's helpful.
Yeah, it might be good if we can provide two perspectives, one from a crypto, then real world, and then David can apply the real world, then into crypto. I think the answer is it depends. I mean, we spend a lot of time looking at different types of entities. What we look for is line of sight from clean assets all the way through to entity and individual, and what we're looking for is a nice regulated channel. Okay, so in grown-up jurisdictions with strong frameworks that exist. So if there's any leakage, ingress or egress of assets, whether they be fiat or crypto, we can actually see what's going on. So it's a point of interest, I would say, because if you then go look at the register that's associated with a particular jurisdiction, you can see the quality of the regulations that have been applied, the individuals, you know, the provenance of the individuals, the nature of the business. So it's not an immediate red flag. I would say it's definitely a point of interest. But I'll pass that across to David and get David's view as well.
Thanks, Hayden. I mean, I would say most money is still laundered through normal financial institutions and cash, but a larger proportion of there's a larger proportion of dirty money in the crypto sector than there is in fiat. There's just a lot more fiat currency. So there's a lot more dirty money there in real terms. And what this means is that yes, it's a red flag, but there's a big but there. It's probably not as risky as people think it is. May not be as risky as cash. It is possible to follow now. We're seeing some of the most successful law enforcement investigations come from crypto investigations and our own investigations at Kroll. You can follow the money through the blockchain. And if you put that together with traditional off-the-chain investigative techniques, then it's not easy for criminals to hide. But we're seeing terrorist groups becoming more familiar with Bitcoin and other crypto assets. And we heard about the type of anonymized cryptos earlier from Hayden. So this is certainly, I would say it is a red flag, but it's a red flag among many and perhaps not as big as we think it is.
Thanks, David, for that. Thanks, Hayden. I'm going to put you on the spot, Howard. I have a question here, and it asks, could you elaborate on the maturity level of the compliance framework mentioned in the context of Jamaica?
I think it's a general observation that with the increased number of alternative financial services providers, so the fintech companies, the FX payment processors, they often, in my experience, they often have good technology and they have on paper a good compliance framework in terms of policies and procedures. That's when you drill under that and look at the effectiveness of the system. What are the KYC processes in practice? What's the onboarding, customer onboarding, and then monitoring both from the point of onboarding, but then on an ongoing basis, and transaction monitoring. What underlies that? Is it to the same level as in some of the larger established financial institutions? Those entities are, I mean, I'm sat in London. Those entities are coming under increased scrutiny from the regulator, and they are being asked to be able to demonstrate more and more that they have effective procedures in place.
I think the only thing I would add from an FATF perspective is that most countries around the world have not got mature compliance systems. It's better in the larger banks, as I mentioned earlier, because of the enforcement action, but in the mid and lower sized banks, and certainly in the non-bank sector and in the new entrants to the financial sector, the fintechs, these systems are not mature. And this is bound to be the case in Jamaica as it is around the world.
Thanks, Howard. Thanks, David. We have one more question. I'd like to think that this is the last one that we can take given the time constraints. But before we invite all the other questions from our participants online, we'll attempt to respond to all of the questions in a follow-up email if we can. But let me throw this question over to Hayden. And it says, how does a service provider, for example, investigate or satisfy themselves on the origin of crypto beyond the statement of source of funds from a client?
Research, validation, open source intelligence, and a full story, and breadcrumbs is a simple term, because once you start digging into an individual's story or an entity's story in relation to crypto, it has to stack up, and it has to stack up in terms of what they're telling you, and it has to stack up with respect to what's out there publicly, because And it very much depends on what the individual or the entity has been involved in, but there's lots of community stuff out there and community commentary in relation to particular projects, what particular people have been involved in. And because it's a public ledger, we can go and look at the addresses, and we can go and look at the relationship between different blockchain protocols and whether there's been any linkages across those. We can look at the wallets that they've got. We can scan the wallets. We can look at the hygiene of the assets. And it all comes back to, so very nice to meet you, Mr. ABC. If you'd like to just sit down and just explain to me what's gone on here and how you've ended up in this interesting position. And it all has to stack up. And, we work hard to work with these particular situations, and it's very much a question of we go through the story again and again and again. We validate it online. We use the scanning companies that are out there. We bring it all back together, and if there's any discrepancies in the story or there's any sort of little bits of breadcrumbs here that we start to look at and think actually there's something of concern, then we start to open it up. We write these source of wealth reports for individuals and entities. We've got quite extensive experience of doing that, and it's the things that stick out are where there's a little bit in there of the story that doesn't quite stack up, and it's a bit like pulling at a little piece of thread, and then it starts to open up, and then you begin to see a different perspective on what's happened here. But it starts with research. As I said, we validate that open source intelligence, and then how does that story stack up relative to what we see in the real world?
Thank you so much, Hayden, for that response. Before we close out, we are almost at the end of time. I probably want to ask Howard to just give some closing words about maybe some of the other services that are being offered by Kroll that our participants online, if interested, could be alerted to.
Oh, well, thanks very much. Well, you can find us. You can find us on our website. You can find Hayden and David and myself, but we offer a broad. Kroll is a global consultancy. We offer a broad range of services, and both managing risk, proactive, identifying risk, as Hayden was talking to, and then investigating when things go wrong. I think I'll keep it a very high level at that.
Yeah. Thank you so much, Howard. Thank you so much, David and Hayden. I'd like to thank all for attending the roundtable today and thanking the speakers for the insightful discussion. Earlier, if you were on earlier, to all the participants, Her Excellency Judith Slater, the British High Commissioner to Kingston, was on introducing and welcoming everyone. She had to run to another engagement today. If you have further questions, as I said earlier, please don't hesitate to drop them in the box, or you could always send them after. There will be a follow-up email from Kroll and the British High Commission and the Department for Business and Trade to reach out. So for all your other questions and concerns, if you want to reach out to the Kroll team or the British High Commission team, you could use that through that email. Again, thanks everyone for joining. I hope you found the conversations and the information useful and insightful, and the report as well. You can deep dive in the report that was shared. And yeah, thank you so much, everyone. Goodbye.
Thank you, Hadara.
Thank you. Bye-bye.